Welcome back to Puerto Rico Life. My name is Jeff Hulse, and I am super excited about this video. Today, I have international tax professional Peter Palsen, and Peter's going to come on and he's going to tell us about Puerto Rican tax incentives and why they matter to us people who are thinking about moving to Puerto Rico. So, Peter, welcome.
Thanks, Jeff. It's great. It's a pleasure to be here.
Yeah, no, I'm super happy. You reached out to me several months ago now because you were watching a video that I did, and you said, hey, you need to think about these issues before you consider whether or not to move to Puerto Rico. And I got a tremendous amount of value from your comments personally, so I appreciate that. You were even kind enough to do a one-on-one Zoom consult with me and just talk to me and sort of talk me through the process. And I thought this would be really helpful for the people that follow my channel. So thanks for agreeing to come on and do that.
Yeah, I mean, it's interesting, Jeff, because here you are live streaming your relocation to Puerto Rico in whatever form it ultimately takes. And I don't know how I found it, because I do a lot of YouTube videos on this subject, and I watched some YouTube videos and yours popped up and I watched it and it was really interesting. But you were talking about moving at a certain time, and it was like, oh, that's a weird time, to move because of the tax reasons. And then I connected with you and mentioned that, and you're like, taxes. And I realized your profile is a little bit different from a lot of people. And that's why, as you put the videos out, you really don't talk a lot about taxes, which happens to be, the elephant in the room in many cases when it comes to Puerto Rico relocations. It's a second most asked question about relocations to Puerto Rico after how's the Wi-Fi?
Yeah, well, and the Wi-Fi is bad, it turns out. So especially if you don't have actual internet installed into your place. Like, I have a Verizon. I love Verizon. In the US, it works really, really well. It works terribly at my place. Actually, the background of the video here is the view of the balcony at my place in Carolina, Isla Verde. But yeah, no internet to speak of on my cell phone. I can't even watch your videos from my balcony. So
yeah, and that's what
resolved.
That's what makes what Puerto Rico's been able to do is attract a tremendous amount of crypto people and DeFi and blockchain people, in a country, that has this kind of a sus power grid, at times when the hurricanes come through or whatever. But that just shows you the powerful force of these incentives is the way that they've been able to accomplish that.
So a question I have about them is like, is this the first time that something like this has ever existed, or have other areas, territories, countries, things like that tried stuff like this? I mean,
no. I mean, so one might ask, why do these or how do these incentives exist? This is like a good outcome. And was this intended, and I would say that in response to your question, the tax relationship between the United States government and the territories goes back well before I was born. And that's a long time. And it's essentially predicated on the fact that the territories, in this particular case, Puerto Rico is a commonwealth and it is a territory, but the territories kind of, in a sense, understand better how to collect taxes from their residents, their population, and then how to spend those taxes to achieve their social goals. They're more on the ground. They are more in touch with their communities. And so the United States essentially steps back and says, to the extent that you have a bona fide resident of Puerto Rico who earns Puerto Rican source income, we'll let Puerto Rico tax that, and we'll keep our hands off of that, which is what Section 933 is designed to do for Puerto Rico, and there are other sections for the other territories.
Okay, so
but Section 933 says if you're a bona fide resident of Puerto Rico, and there are 3.3 million bona fide residents of Puerto Rico, so this is not like a loophole affecting, just Act 2022 people. This is for everybody in Puerto Rico. And the U.S. is stepping back and saying, Puerto Rico, you got the first shot here. And to the extent you do or don't tax, we're still hands off.
So if I understand correctly, what you're saying is if someone lives in Puerto Rico, they're a bona fide resident, and they make money in Puerto Rico, the United States is not taxing that money. They're letting
Right.
Puerto Rico tax it, and that's it.
Right, which is like a whole world different than how the U.S. taxes its citizens. And the U.S. taxes its citizens regardless of where they live, whether they've ever stepped foot in the United States. They're taxed on their worldwide income, and this is, in a sense, an exception to that, based on the fact that the territories of the United States have this prerogative to tax their residents and raise the taxes and spend the money. And they also have the obligation to fulfill the social, in a sense, many of the social obligations that come along with that collection of revenues. So it's not just a, kind of one-sided keep all the money. They invest it in infrastructure and they spend it on social programs. So that's the balance that essentially is the platform on which the tax arrangements exist.
Okay. All right. So we now understand that the IRS does allow this, like you said, not a loophole. Why then does a place like Puerto Rico territory decide to create what frankly sound like insanely good deals for people to take advantage of? Like what's the reason behind it?
Yeah. So Puerto Rico is kind of a land of tax incentives. And the reason Act 20 and Act 22 are now part of Act 60 is they try to consolidate all of their various tax incentives into Act 60. And they have many, many tax incentives. And we'll talk about a couple of the other programs they have, which are relevant to kind of the outcome, or where do we go from here with respect to these incentives. But in this particular case, these incentives were created back in 2012 to attract entrepreneurs and investors to go to Puerto Rico. And the history, at least up until this year, because there are kind of record numbers of people now moving, or record numbers of people submitting contracts for these tax incentives. But historically, it's been several hundred people a year versus, I think, after Hurricane Maria, 100,000 people moved from Puerto Rico to the U.S. mainland. And so there's this kind of big migration out, and they've effectively been trying to counterbalance that by trying to bring people back into the community to contribute to the economy, as these incentives have clearly done.
So, all right. So you kind of alluded to Act 20 and 22 and Act 60, and you talked about, sort of applying. So when someone, like say I moved to Puerto Rico, which I'm, as people on this channel know, I'm in the process of at least transitioning to spending more time in Puerto Rico. We can talk about my personal situation, why I might not want to be a resident of Puerto Rico, if we want, towards the end of the video. But say I did move to Puerto Rico, or someone moves to Puerto Rico, do they just automatically get the advantages of some of these benefits, or is there something else they have to do?
Right. So the Puerto Rico incentives are formal. You get a contract from the Puerto Rican government that essentially validates the eligibility. When I say validates the eligibility, you make a claim for eligibility, and then they grant the contract. And it's always subject to review whether you're meeting all the conditions, and there are conditions under both Act 20 and Act 22. Act 20 is a business incentive that allows you to set up a Puerto Rican company. And that company, it's called an export company because it has to earn its revenue from customers outside of Puerto Rico. And a lot of people think about exports and they think about widgets or physical product. This is not happening. This is really all about services and exporting services, whether those are web design or management services or legal services. There's a list of approved services. And if you're providing these approved services through the Puerto Rican company, which in many cases will have one employee, and that could be you, and that company can be eligible for a 4% income tax rate. The dividends paid out of the company are tax exempt in Puerto Rican tax rules. And then in this U.S. Section 933 kicks in, and the U.S. steps back away from the income of this business to the extent it's sourced in Puerto Rico. And so you can end up with this 4% tax rate being, in a sense, the bottom line tax rate for these eligible services.
So what you're saying is, if somebody like you who provides services to the United
Yeah.
States were to relocate to Puerto Rico, continue to do the same kind of work that you do now, you potentially could pay 4% tax, and that's it.
Yeah, and I think that, like in 2012, nobody had really locked on to remote work and work from home or work from wherever. So it's in a sense Puerto Rico's version of the work from home or remote work, which many other countries are now working to replicate. I think Barbados has a program and Bermuda has a program. A number of other countries have a program to encourage you to go and do your work from that country. And in the case of Puerto Rico, it's can be more effective because of the Section 933 exemption. So yeah, I could go to Puerto Rico, provide my consulting services, recognize the income through an Act 20 company, and enjoy the benefits of these tax exemptions, all in the the spirit of the relationship between the U.S. and its territories, and all in the spirit of what Act 20 and 22 are trying to do, is incentivize people to relocate to Puerto Rico and contribute to the economy.
Yeah. Now, do you think it's effective? I mean, has it been beneficial for Puerto Rico?
Yeah, so let's round this out. Let's talk about Act 22, which
Oh,
is the
sure.
individual. It's the individual, and it's a counterpart. And some people do Act 20 and Act 22. You don't have to, but Act 22 is the investor incentive, where if you go to Puerto Rico and you realize types of investment income, most notably, and particularly for crypto people, capital gains of either a short-term or long-term nature, you can get a tax exemption to the extent those capital gains are attributable to the period of bona fide residence of Puerto Rico. And all of this is got like a lot of little details and rules. And I think that some of the videos that I've put on our channel at Frost Tax Law go into more depth about this.
And I'll make sure that those are linked in the comments below the video as well. So so if you have specific videos you want people to point to, we'll link those, but we'll definitely link the channel as well down there.
Yeah, because there are, whether you're talking about Act 20 companies, there's some real traps, because Act 20 companies, Puerto Rican companies, are treated as foreign corporations for U.S. tax purposes. There's been a lot of mischief with foreign corporations. And so there are a number of rules that can be triggered when you transfer assets or income rights or whatever to a foreign corporation. So you got to be careful about that. And all these sourcing rules come into play about what is and isn't Puerto Rican source income. As a result of this arrangement we talked about between the United States government and the territories really only have the ability to exempt income sourced in their country. So if I went to Germany, if I was someone who was born in Puerto Rico and I decided to go to Germany and work in Germany, that is not an exempted type of income under Section 933, because I'm not in Puerto Rico earning the income in Puerto Rico. So these sourcing rules are very important. Again, you have to be a bona fide resident of Puerto Rico, and the income has to be sourced in Puerto Rico. And those are the two big tent poles here with respect to these incentives. But
yeah, can we talk briefly about the bona fide resident thing? I mean, I know we weren't initially going to talk about that, but there's a lot of confusion on the interwebs about what it takes to be a bona fide resident. I've heard people say if you spend as little as 90 days a year in Puerto Rico, you can be a resident.
Yeah.
And there's all these people saying different stuff. And I'm really curious about, like, what does it actually take to be a resident of Puerto Rico?
Yeah, so there's actually, and I would say that we're dealing with 9 years. These provisions, these incentives, are getting ready to hit their 10-year anniversary. And in this entire period of time, there has been virtually no specific guidance issued by the IRS on the qualifications for purposes of Act 20 and 22. And that to me is like a bit of a gap. On the other hand, there is a lot of guidance from other areas where these bona fide residency determinations are relevant, and in particular, United States Virgin Islands. There was a effort by the IRS to enforce, and that's what they do. They enforce. The IRS does not set policy. They don't make policy. They don't change policy. They just enforce what's on the books. So they're enforcing this Section 933, And they've done that before in the context of the United States Virgin Islands. There are a number of court cases that came out of that, talking about bona fide residents. One guy lived on his boat. He had a wedding. His daughter got married, and they got married in the United States Virgin Islands. And the court actually said, well, over half the people at the wedding were people this guy had met in the United States Virgin Islands, and therefore that's a good fact. And when they get down to such a granular level of detail, you can see it's not just a 183-day test. At the end of the day, there's something called the closer connection test. There's something called the tax home test. And it's kind of a totality of your assimilation, really. I mean, Jeff, what strikes me is like you are just hell-bent on assimilating into the Puerto Rican economy, like not just the economy, but the whole lifestyle there. And that's great. But when people try to kind of parse that 183-day rule and just kind of lean on that too exclusively, I just feel like, that's not where you want to be. Remember, this Section 933 is not designed for Act 20 and Act 22 people. It applies to all the residents of Puerto Rico, 3.3 million residents of Puerto Rico. That's your peer group. That's what you're trying to look and feel like.
So if you move to Puerto Rico and you're there all the time, it's not an issue, right? Like if you're there 350 days a year, you maybe go visit your grandma or something, you're probably going to be fine. But it's also going to be like, are you meeting people there? Are you attending community events there? Are you voting in Puerto Rico? Are you opening bank account? All that stuff sort of together is kind of what you're thinking.
Well, yeah, I mean, I don't want to set the bar too high either, but from the early days, I watched videos by these guys called F-stoppers, which is a camera term. And they have a number of videos that talk about we're moving our business from South Carolina it's an online photography business. We're moving our business to Puerto Rico. And then they say, well, we moved our business to Puerto Rico. And a year later, here's what, our look back on this whole thing is. And it's very clear that they are kind of really immersed into the whole, and they're taking advantage of the local, vistas to shoot, camera videos and pictures and everything like that. And they're just kind of all in. They trick out their house to make the Wi-Fi work because it's all cinder block, construction. So there's just this real commitment, to assimilation. And I think that makes a lot of sense. When I talk to people about bona fide residence, I said, are you really going to change your whole lifestyle? If taxes are an important factor, I'm not saying in many cases they're just not the entire factor. I think, for example, Puerto Rico, as I'll talk about a little bit later, has done a great job of creating a kind of crypto environment down there, and people want to come down there and be part of that environment. So it's not all about the taxes, but if taxes are relevant, I said, do you really want to do something with a 51% chance of success? I wouldn't, but that's kind of where you have to think about this. And I think that, as I tell people, the more you can wake up in the morning, you can walk next door to someone who's lived in Puerto Rico all their lives, and you can say, you and I really, there's just not a lot of difference here. I'd feel good about that. And it just gets shades of gray.
Yeah, no, that makes good sense. So it's just about really being a resident. There's no exact rule. It's not like you can say if you make it 183 days, you're good, because there are other factors involved. And people need to really be thinking clearly about, actually living in Puerto Rico if they want to claim they live in Puerto Rico.
Yeah, I mean, and there's just so many. I mean, there's this form 8898 that the IRS makes you file when you take up bona fide residence, file it with your return. And it's a 2-page form, and they ask you a whole bunch of intrusive questions about whether you have a residence available to you, a car, your bank account, your brokerage account, they're kind of asking you about your entire life. I actually, one Sunday morning, number of months ago, really, Puerto Rico actually publishes a list of all the people that get these contracts under Act 20, businesses, and Act 22 individuals. And so I kind of grabbed, a section of that list and went to LinkedIn and tried to find these people and kind of understanding how they're representing themselves. And I think that, people are concerned about an IRS audit, and the IRS is on the ground in Puerto Rico. They've got a campaign around Act 22. They're also poking around Act 20. So if you're concerned, then you need to be concerned about how you're presenting yourself. And the IRS loves to get on the internet, and they will check out your LinkedIn and check out other ways in which you're talking about what you do and where you spend your time, and how you talk about yourself. And if you move to Puerto Rico, update your LinkedIn.
Yeah, no, that makes sense, right? So, yeah, I mean, I've been super open about my intention to live in Puerto Rico, so I think I'm probably okay with all that. Although right now, if the IRS is checking, they'll see that I've been in Puerto Rico for 9 days of the last 45. So what do I know, right? Like but I'm still in transition. So I want to talk about this a little bit from my own personal perspective, because I think it's useful for the people that watch this channel. I've shared with you, I'm a real estate investor. That's my primary source of income as I invest in multifamily real estate in the United States. Obviously, things like capital gains on property in the United States, or at least it's obvious to me and hopefully to most people that watch, those are sourced in the United States. That's never going to, I can't pick my apartment complex up and move it to Puerto Rico. So to the extent that I'm going to be taxed in the US, I'm going to file a tax return if I live in Puerto Rico, and simultaneously file a tax return in the United States. And those tax returns are going to have interactions, obviously. If I created a management company, right, an export service company in Puerto Rico, to do some of the management functions that I'm currently doing in my properties, I might be able to, source some of my income in Puerto Rico, but I'm never going to be able to source everything I do in Puerto Rico. I know that for sure. Are there anything is there anything I should be worried about? Because I actually pay a very low tax rate now. I have a lot of depreciation. I may actually pay a zero tax rate this year, probably next year as well. I'm in a very favorable industry from a tax perspective.
Yeah.
We saw former President Trump paying $750 in tax, and people got upset about it. And I thought, that seems like a lot. $750, right?
Well, now you've made us political, Jeff.
Oh yeah. Well, I'm not making a political statement.
Half the crowd just turned it off.
Yeah. Well, potentially. Yeah. Trump is awesome, terrible. Let's go to that. Maybe we salvage ourselves. No, but the reality is, I'm in a situation where the tax incentives don't have a lot of appeal to me, and we alluded to that at the beginning of the video. The reason I haven't talked about them a lot is because I'm not even sure that they help me. With all the compliance costs and a 4% rate on export services, I may actually pay a higher tax rate if I'm a bona fide resident of Puerto Rico. Do I have to worry about sort of accidentally being subject to Puerto Rican taxes? Is that something I need to be thinking about?
Well, yeah, I mean, I think we talked about this a little bit before. So, for example, you take a simple case where you sell some property and there's some depreciation recapture. For example, is the depreciation recapture going to qualify as a capital gain under Act 22? Or are you going to have to pay tax on that in Puerto Rico because it's not incentivized income? And then you have to pay tax on it in the US because it has to do with the sale of a US piece of real estate. And then you don't want to pay double taxes, and you have to file mounds of paperwork in Puerto Rico and the US, because Section 933 just said, it doesn't say just don't stop filing. It's just an exemption of certain amounts of income. And so if you still have other amounts of income, you still have to file tax returns. And I think this is, I like to say, and Jeff, it's very much, I think you can relate to this. It's like a big social experiment that's going on right now. We're to some degree in kind of uncharted waters, because I've been doing tax consulting, tax work, international tax work for very large companies, very big businesses for many years, 30 years, most of which, we didn't have Discord and Reddit and all of the other kind of channels, YouTube and everything like that, where people can acquire all this information. And it's remarkable that, as I mentioned, in Puerto Rico, you get contracts. You get contracts that tell you that you have a long-term tax incentive arrangement that's applying to you personally. And in the case of the IRS, you can't get a contract. You can't even have a discussion. You just file a tax return, and then the IRS decides they're going to look at that tax return and audit that tax return, whatever. And there's this kind of like all of that's happening in an area with respect to Act 20 and 22, where there's been zero specific guidance issued. There is an IRS publication 570 that talks about Puerto Rican territorial and just generally territorial tax systems, and it's been out there a long time. But there's nothing really specific to Act 2022. There's no specific really guidance in Puerto Rico on Act 20 and 22 and how it's applied and particular fact patterns, no rulings that I'm aware of. And so, and then on top of that, you get like the internet and everybody kind of like, it's a bit of an echo chamber where everybody kind of talks themselves into what the position should be or, kind of how it works. And that's the social experiment part to me is like this whole Puerto Rican tax incentive Act 2022 thing is live streamed. It's happening just out there because it's all really almost public knowledge of what's going on. And you have people like you and some other channels broadcasting from Puerto Rico. And so we are, and the IRS has been pursuing this Act 22 campaign, I think for about 9 months now, with really no visible, at least to the public, knowledge. It's not even clear how many notices have gone out. To some degree, these campaigns are supposed to be about public awareness and education, but I haven't seen billboards go up or, like in-flight magazine, ads or anything like that.
They don't have in-flight magazines anymore because of COVID. So maybe they put it in the magazine and no one saw it.
Yeah. Well, I mean, when I like Google Act 20 and 22, I don't get like the IRS telling me kind of like, here's kind of, and they actually did that in not in-flight magazines, but back in 2005, when they got concerned about some things people were doing in the United States Virgin Islands with a similar set of tax incentives, they issued a notice and they said, well, we're looking at this and here are some things that we don't like about it. And people, to some degree had this chance of fixing their problems. And it does not appear so far that things are moving along those lines. And if the IRS wants to come on the channel and talk about it, that would be great, because I think a lot of people would kind of love to hear a little bit more about what's going on. There's some interplay between the US IRS and the Puerto Rican Treasury, and maybe, Puerto Rico is going to tighten things up a little bit down there. Don't know. And then you got politicians kind of crashing on this a little bit. And to me, that's kind of a shame, because this incentive regime, it's been around, as I said, 9 years. I don't think anybody, and I'm pretty sure that nobody, when they put this incentive in place, thought they were going to catch a whale like the crypto community. When I say catch, I mean, they have attracted many people, not just in crypto, not just Bitcoin investors, but people who understand the possibilities of DeFi and blockchain. And they are, they've attracted people who know how to raise capital. They've attracted people who kind of know full stack developers, really know how to commercialize all of this, asset managers. And they've attracted kind of this, they have become effectively really over the last year or two kind of an on-ramp to the metaverse down there in Puerto Rico. And I don't think anybody saw that coming.
Oh, it's unbelievable. I'll tell you, one of the things I like most about the time I've spent in Puerto Rico over the last year is the people I've met. It's just this fascinating mix of people. You've got some old school people that have been in since 2013 or 14 that jumped in early, just to save on their taxes. But now you have this whole influx of, like you said, the crypto people. And I met, in 1 week, I met people that are real estate investors, people that are starting charter boat companies, people that are in DeFi, people that are early crypto investors that just have piles of cash they don't know what to do with, right? Because they just made so much money. All in 1 week, I met all these people. I mean, and it's like almost every time I go there, I'm meeting someone doing something interesting that I never even considered doing before. And then when you couple that with the effects of COVID, tourism's exploding in Puerto Rico because it's easier to come back and forth to the U.S. than almost anywhere else in the world. It's like the whole the whole island is going through this huge transition all at once.
Yeah, and they've got this community. Every other country in the world is trying to kind of create a crypto thing in their country. Like, and Puerto Rico's done it. It's like Buddy the Elf. You did it, and Puerto Rico's done it. So let's like take a minute and celebrate this fact that whether they intended to or inadvertently, somehow they have created a crypto community that's really the envy of a lot of different places.
I mean, I even talked to a guy this week when I was there that is talking about tokenizing real estate interests, right?
Yeah.
Like in using like Reg CF crowdfunding to create a tokenized version of ownership of real estate. I mean, that's fascinating to a guy like me. I love real estate, and I think crypto is, the blockchain and DeFi and just the immutable record part of the blockchain and smart contracts adds this huge element of future potential to that whole thing. And I'm not an expert on any of that by any stretch, but it feels so much like the future.
I agree. And they've got, the people down there, it's not just like people that bought Bitcoin, instead of a pizza and they're still sitting on it. It's people that really understand all aspects front to back about how, where this is all going. And it's pretty remarkable that they've been able to do this. And I wrote an article like last week. I just threw it together, and it's called Can Puerto Rico Have Nice Things? Because it seems like what they've done here is something remarkable. And again, I'm not sure if it was intended to capture this crypto, the DeFi blockchain community 9 years ago, but they've done it. Now, can they keep it? Is everybody going to crash on it? And I have a video on the channel talking about, as I mentioned, Jeff, Puerto Rico's got a lot of different incentives. They have an incentive. They give 4,000 doctors or medical professionals a 4% tax rate to stay in Puerto Rico and provide critical medical care. Because these people can go to Orlando, they can go to New York. I don't understand all of the regulation of medicine, and how the licenses work. But point is, they could come to the U.S. and enjoy a really, good income producing opportunity. And guess what? The United States would make more taxes. They would get more taxes if people did that. But you would lose critical medical care in Puerto Rico. So is it the right thing to do to take that incentive away? And I'm not suggesting crypto investors and doctors are really kind of side by side here on the front lines. But the point is that there are a lot of different incentives in play. And before kind of like pulling the rug out, you have to think about, are these being effective? Are they accomplishing something? Clearly, there is a major contribution by people who have these incentives to the economy, because they have to pay, roughly $20,000 a year in donations and fees and local tax provider services and other
also they're
kind of costs.
If you live in Puerto Rico, you spend money in Puerto Rico, right? I mean, that's like, it creates, sales taxes and all that, property taxes and all that kind of stuff as well.
Yeah. And it's not cheap, Jeff. I mean, you and I talked about, like, Jeff, why don't you go to Costa Rica or Mexico? You can live for probably half or a quarter of what you have.
Cheaper. And frankly, the first so much of my income earned there is going to be tax-free as well. I mean, there are different rules on that. I mean, potentially, right, I could have a better tax situation for me personally in Costa Rica and spend less money.
I mean, that's probably a whole nother video comparing,
the gives and takes.
I
have to start a new channel. I'm pot committed to Puerto Rico life at this point. So.
Puerto Rico.
Plus, I already signed the lease.
Maybe Costa place. Rica. Yeah.
Yeah. I mean, like, I showed you this beforehand, but like this, the place that the backdrop here, it's like, oops, I went the wrong way, but like this is, that rainbow was literally from my balcony like a few days ago. I mean, that's like, what else do I need? It doesn't matter. I'll pay extra for the rainbow.
You've reached the end of the rainbow.
Yeah, actually, it is kind of an analogy for Puerto Rico, right? Like the pot of gold at the end of the rainbow. It's like right there in San Juan, right on the border, right?
right?
It's actually a really, I mean, so for me, these things, I don't know what's happening next, right? I put up the question, what's next for Puerto Rico, and maybe you have some insight into that. You've already alluded to it a little bit with, the potential of modifying or removing some of these incentives. But there's all sorts of talk about, Puerto Rico becoming a state. Just getting rid of I forget the IRS regulation, but the IRS could simply say, hey, you know what, we're going to start taxing people in Puerto Rico. They don't have to continue with the 970 or whatever it was that you were referring to. I don't think. I mean, probably Congress has to act to do that, but they can do those things.
Well, we've just gone through this year of major tax reform proposals. I mean, pretty much everything under the sun got looked at, capital gains rates and corporate rates and all this other stuff. And nobody mentioned this Section 933 in that whole process. Nobody brought it up. And so I've done a video. I've kind of done the videos. I'm not a promoter of this. I actually take a very clinical look at this. I do recognize, and I think it should be a part of the equation to say that this thing's been very successful in attracting some next generation great minds, to Puerto Rico. And if you recognize that and you push more investment into that space, upgrade the grid maybe a little bit, but and bring local businesses into that, something really magical, rainbowish can happen in that space. And I think for that reason, it would be a shame, to have the rug pulled out from under these provisions. And you kind of like look at the threats. There's been some negative talking from some people in Congress about these provisions, but not really in the sense of get rid of them. Just like, let's look at this a little bit more closely. And when I think they do look at it a little bit more closely, they'll see that incentives are meant to incentivize behaviors, and this one's worked about as well as any incentive you can get. You can argue about the efficiency of it, compared to other ways that we can provide support to Puerto Rico. But I frankly like the idea that they're doing something. They've done something. It's worked. What's wrong with that? And I've got a video out there talking about some of these corporate proposals. The Puerto Rico has, as I said, a lot of incentives. They give incentives to large U.S. companies to create jobs down there. And the IRS, in a study they did, found that these large U.S. companies, Microsoft, Medtronics, pharma companies, have created over 70,000, I think, jobs in Puerto Rico. And these incentives have helped mightily, and that's been a good thing. And they talk about it in the context. I think the study was put together in part because of the criticism of tax incentives globally. This race to the bottom. Janet Yellen calls it a race to the bottom. Well, Puerto Rico was winning that race, and they were doing victory laps. They had attracted all these jobs based on these tax incentives, and now the world wants to call off the race, and the U.S. wants to change their laws and knock out some of the major underpinnings of why these incentives have been successful in creating so many jobs in Puerto Rico. And to me, it's unfortunate. They might just be, in a sense, collateral damage here. I hope there are some exceptions put in place. I know Puerto Rico's talked about pivoting on some of these incentives to make them more global friendly and consistent. But I do think, we ask the question, can Puerto Rico have nice things? Is this something that they can keep, something that can be justified based on the results? Which is, again, an incentive is supposed to incentivize, and it's done it. Victory has been declared here.
So I definitely want to link to your article as well in the comments. So if people are looking for that, they can find that. I haven't seen this article. Have you actually published it already?
No. I just kind of flung it together. Partly because of the preparation to this show, it kind of illuminated to me. It made me realize how effective these provisions have been, and as part of that is all the people I talked to a fair number of people, which to me is like, it shows how little kind of concrete, clear, available knowledge there is about these provisions that they call somebody from Annapolis, Maryland, when frankly most of the knowledge really is resident down in Puerto Rico. And I think once people get down to Puerto Rico, they tend to be able to access that. They start working with a Puerto Rico firm to get the contracts in place, and they really kind of blend in, and that's part of the assimilation process. I don't know what your experience has been.
Yeah, well, since I haven't decided if I'm going to establish a full-time residency, or try to sort of stay under, like I want to take the opposite strategy, right? Like we've talked about this off air, but like one strategy for me personally might be to spend 175 days a year in Puerto Rico and just make sure I'm not a Puerto Rican resident. I can
Right.
still enjoy the benefits of being there a significant amount of time. I can enjoy the benefits of getting to know, because to me, the real advantage to being in Puerto Rico is immersing myself in this new culture where all this stuff is coming together at once, and just sort of riding the wave of all these benefits, right? The tax benefits themselves aren't actually that useful to me, as I've said.
Right.
And I actually have met people, I'm obviously not going to name names, that say they've been in Puerto Rico for 3 or 4 years and just like never declared they live there, and they've just been hanging out, right? And they're not worried about the tax incentives. I think that there's risk to that for sure, right? Like, because if you're actually there, you might actually be declared to be there. The Puerto Ricans, the IRS probably doesn't care, right? I think that's true, but the Puerto Rican Treasury might, because they also have an incentive to collect their taxes.
Yeah, and I should say, that I should give the standard caveat that not intending to give tax advice here, and consult your advisor, because it is just not really as clear as some people might think. I think a lot of people, when you're talking about tax, it's one of the things I like about taxes. It's kind of scientific. There's an answer. There's a law. You apply the law. It gives you a result. And I think we're all struggling, to try to figure out. And there are so many fact patterns involved. It's like you look at crypto, and it's kind of lending and staking. Does lending and staking qualify for the Act 22 incentives, or is that something you should try to do through an Act 20 company? Does it qualify as an export service? How do you get your tokens to the Act 20 company to lend them and stake them? And you get, like that's just one kind of bit of uncertainty. And really, in the 9 years, you talk about kind of 9 years since these provisions, incentives have been around. The first significant piece of crypto guidance the IRS issued was also about 9 years ago. So you got kind of this combined 18 years of existence of Puerto Rican tax incentives and cryptocurrency, and now they're kind of being squished together. And through that entire 18-year period, we kind of just know one thing for sure, and that is crypto is property, which is a very important thing to know for purposes of taking the capital gains and the incentives in Puerto Rico and the Section 933 benefits once you allocate the gain to your residency period and the pre-residency period, which doesn't qualify. That's important to say. But point is, we're just kind of feeling our way along and really looking for we'd love to have more guidance, more visibility, more clarifications coming from all sides of this. With respect to these programs, with respect to crypto, with respect to the Puerto Rican side and the U.S. side. And that would be something I think would be a very beneficial thing.
Yeah, so if the IRS is watching, we invite you to come on the channel and illuminate us on this, because we want to follow the rules, whatever they are.
Your viewership would go significantly up if
I think that's true. So I'm happy to have the IRS. like there's a single person that speaks for them.
That would be wonderful.
Yeah,
and they could do their.
If any IRS folks want to come on, we're happy to talk to you. But listen, I really appreciate you coming on to talk about this stuff. I would encourage people that have watched this far into the video to to go over to the Frost Law YouTube channel, which we'll put in the comments, and subscribe to that, because I found great value from your material. In fact, what I like the most about Frost Law's tax stuff is the YouTube channel. It's a lot like you yourself. You're explaining what we know and what we don't know, and you're making it as clear as possible in a very murky situation. Right? I mean, we don't know all of the information, and it's really easy to go on the internet and see some random person say, if you do this, then you don't have to pay tax anymore. And I see this all the time. I've seen multiple videos where people have explained things that I am fairly confident are actually inaccurate. Like they're just not true. Like you said, one thing we do know is that you can't have a bunch of cryptocurrency gains that move to Puerto Rico, sell them the next day, and just not pay tax on it. And I've seen people making those claims. And that's something we know for sure is false. And so you have to be really careful about what information you sort of absorb from the interwebs. And that's what I like about yours, is that you're really careful to say, hey, here's what we do know, and here's what we don't know yet. And here's things to think about. And like you said, I'm also not giving tax or legal advice on this channel ever. So if anyone wants to know that, like I want to be clear about that. But I do think it's useful to absorb as much information as we can. And so I appreciate you coming on and sharing that with us. Is there anything else that you want to share before we wrap up here?
No, that's all I've got for today. There's a lot of different aspects of the incentives, and I just want to kind of just leave the viewers with just this one sense that these incentives have succeeded remarkably. That's a nice thing, and we are really trying to evaluate right now whether that's an okay thing. But it's okay with me.
No, well, listen, I welcome you back on the channel anytime. So if you come up with some more things that you want to share with us, we'll have you back. And people can check out frosttaxlaw.com for more information about you. And then, of course, the YouTube channel, which is in the comments in this video. And as always, I appreciate you watching the channel. And I would love it if you would like and subscribe to the channel so we can continue doing this. And we can come back 6 months from now, hopefully with some more guidance and figure out what it is we're going to do. Thanks again, Peter. Anytime you want to come, you just show right up, okay?
It's been a pleasure, Jeff.
Thank you so much.